Finance is the art and science of managing money, specifically how money is raised, earned or borrowed, managed, budgeted or protected, and used, spent or invested over time. Finance applies to everyone: governments, large corporations, and you personally. Areas of finance have three. First, personal finance, which is managing your own money. This includes budgeting, tracking income versus expenses.
Saving, setting aside money for future goals or emergencies. Investing, buying assets, stocks, bonds, real estate to grow wealth.
Debt management involves using loans, credit cards, and mortgages wisely. Insurance is about managing risks like illness, accidents, or job loss. Capital structure is choosing the right mix of debt loans versus equity, or selling ownership shares. Working capital management, ensuring the company has enough cash for day-to-day operations, paying salaries, buying inventory. Goal: maximize the company's value for its owners, shareholders. Public government finance, taxation, collecting revenue from citizens and businesses. Government spending, allocating funds for infrastructure, defense, education, healthcare. Debt management, issuing bonds to borrow money when spending exceeds tax revenue. Budget deficit/surplus, when government spends more deficit or less surplus than it collects. Key principles of finance. A dollar today is worth more than a dollar in the future, because you can invest today's dollar and earn interest. Why loans have interest. And why investing early matters. Risk versus return. Higher potential returns usually come with higher risk. Safe investments, like government bonds, pay low returns. Risky ones, like startup stocks, might pay high returns or lose money. Liquidity, how quickly an asset can be turned into cash without losing value. Cash is perfectly liquid. Real estate or collectibles are less liquid. Common financial tools and concepts. Assets, things you own that have value. Liabilities, debts or obligations. Net worth equals assets minus liabilities, which is a snapshot of your financial health. Interest is the cost of borrowing money or the reward for saving. Diversification, spreading money across different investments to reduce risk. A simple example: if you have $1,000 today by lenders, you could save it in a high-yield account earning 4% interest. In a year, you'll have $1,040 value of money. If your business uses $1,000 to buy a small machine that produces $200 of extra profit each year, you'd decide if that return is worth the risk.
Public finance. Your city collects $1,000 from taxes and spends it to repair a sidewalk, benefiting the community.
Learning basic finance helps you make smarter daily spending and saving choices and avoid costly debt, like high-interest credit cards. Build long-term wealth through investing. Understand business news, government policies, and even your paycheck. Would you like to go deeper into any specific area, such as investing, budgeting, or how the stock market works?